Hello guys. I have done before a lot of videos about penny stocks and I ask you not to trade them, okay? Because first, they are manipulated. Second, anyone can change the price because they are too small and the price is too small and the volume is little. It means you find volume 10,000, 20,000, 50,000, 100,000. If it is 10 cents to 20 cents, it's nothing. It means there is no money in it. Now, when the promoters and the scammers, they go there and they do this pump and dump schemes, and you see the stock going from $1, it goes to $5, $6, $7, and then it goes back again to $2, $1 or 50 cents. Okay, in this video, I will try to give you guidelines to do swing trading with penny stocks, but not with what we call pump and dump scheme. Okay, how I choose some penny stocks or stocks that are too little, okay, 5, 6, 7, 10. So these kind of stocks, okay, because most of the time stocks that are small, they can go faster than bigger stocks. Okay, $5 can go quicker to $10. Okay, $15, $7. It means in this kind of range. But you can go down wherever you want, $1, $2, $3, wherever you want. Now, the first thing you do is you search for stocks that are not volatile. What does it mean, this? I always ask you not to look for these volatile stocks because these volatile stocks, they are known. Okay? When they are known, some people are buying long, some people are shorting, so there is a big conflict. Okay? When there is a big conflict, you will see this kind of long candlesticks, either big one which is green, it goes very, very high, and then the next day it goes down, 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 and it is very, very red. Okay, it's red. Sometimes it's green, sometimes it's red. And you see it in the chart. You can't miss it. It's a big, big candlestick, either green or red. So you should avoid this kind of volatile stocks, wherever they are. Either they are $1, $5, $6, $7, $10, whatever. Avoid them because they are volatile. You can't make the money except when you do day trading and you wait for half an hour or 2 hours and then you see. Okay, we are looking for stocks or companies that are going slowly up. Okay, so the way I train and I teach people, the entry is always above the resistance line. The first day, and it shouldn't be a big day. It shouldn't be a big candlestick because big candlestick, very, very big. It means that a lot of people have known about this stock either by newsletter or by scammers or by promoters. So we are not looking for those. We are looking for different kind of penny stocks that are going slowly. I have made a lot of videos showing what I mean by this. It's just the stocks that go slowly up. You see, for example, a stock that goes from $1, it goes to $5 slowly. Because, what does it mean slowly? It means not a high percentage each day. It goes for 4 or 5 days up, 1 day or 2 down. But these candlesticks are small. They are not too big. Now, and you see the volume is slow. Low volume, not high volume. Why? All the people, when they search, they get attracted to high volume. Okay? They get attracted to high volume. That's why for us, we do the opposite. We go for low volume. Sometimes you find the bid and ask is more, but it's okay. It's okay to risk some money. But at the end, if you win, you can make too much money. Now, 2 days or 3 days ago, I have 2 or 3 stocks that I sent to my subscribers. One, it was 11.55. I sent it to them. I don't know how many people have bought this stock, but because I sent a lot of stocks. That stock, it was a jackpot. Because from when I sent them, it was 11.55. Next day is 17.60. Do you know what does it mean? From 11 to 17. It's 60%. Now, those people were, but I ask them always, when you see a high percentage, 50%, 20, 30, 40, you just get out, or you just sell almost all shares and you leave little bit. Why? Because as you might know, these kind of stocks, when it becomes volatile, the next day it becomes volatile. It goes up so high, so you should sell. If you get a good result, okay, you just bought it yesterday or the other day, and then you get 20%, 30, 40, 50% of your money. What are you waiting for? Because if you stay more, the more you stay, the more other traders, they know about the stock, and some people they buy, some people they short, and it will be a fight. Now this fight, you see it in the stock itself. You see a long candlestick, either green, and the next day maybe you see another one, another green one, or you see people they sell it, it becomes a red candlestick, and it is very long to go down. So wherever the other guys have won as a profit the other day, the next day they lose it. So it's better for you to just have a good percentage and exit, because these stocks are not stocks for the long run. Okay, it's not to invest in these companies. These companies are very tiny companies. Sometimes it's rare one of those they go up. When they go up, it's because a mutual fund or something, they buy this, but after it becomes 7, 10, 15. Mutual fund, they don't buy these stocks that it's $1, $2, because they have too much money and the stock is too small. Okay? So if they put some millions, the stock will go from $1, it goes to 30 or 40 in one day. That's why they are not interested. But the stock, when it is a big company and it is like $5, $6, $7, some mutual fund they get interested, because when they buy, the stock doesn't appreciate very, very quick, slowly going down. So this is the guidelines. Looking for penny stocks or small issues like $1, $2, $3, $4, $6, $7, $10, $15. It means all these small companies, small stocks, the first guideline you see, they go slowly. Low volume. Second criteria, low volume, not high volume. Okay? So when you see it, it goes slowly. But when it is known, it's over. When the first day it's known, like this stock that I show, it's called Lake, L-A-K-E. Just an example. I sent them like 3 days or 4 days ago. It was 11.55 when we buy by the end of the day. This is my strategy, to buy by the end of the day. Now when they bought, and next morning, in the afternoon, like 3 o'clock or 3:30, it was 17 something, and it goes to 19, I think, the next day. But it was so risky. So I asked the other people, you should sell. Okay, it's very dangerous. So this is the most important thing in this kind of stocks. First, the stock should go slowly, small candlestick, not big and long candlesticks. Okay, and the volume stays the same. Most of the candlestick you see, they buy, they sell, and the stock is going up. Okay, going up slowly. Low volume. Now, low volume, it doesn't mean 50,000 or 200,000. Low volume, it means not millions. Because when it is millions, it is discovered. When it is discovered, it becomes volatile. And you can make too much money and you can lose too much money. Okay? So it becomes risky. So at first, they weren't risky. The first day, it goes a little percentage. But one day when it goes up, it goes 60% in one day. It's so good. So you just sell. At the end of the day, you see 60%, 50%, 40% of your money, just sell. Or if you like it, you can leave just a few shares and see the next day if it goes more up, so you can make more money. If they go down, you put stop loss and you exit. Okay, at least you will have a high percentage. Okay, I don't use in my strategy. I don't use a lot of like indicators, and as you might see in other when you go to other channels, they use, and you see the whole chart is filled with lines, is filled with clouds, with colors. It's useless. I'm telling you, all what the people do is useless. Okay, for me, I use only two. One thing is usually when it goes just the resistance line. Okay, and this is the thing I'm using in my strategy, plus my criteria and the guidelines. Now this information is just for small issues, $10, $15. You could find some other stocks, big stocks, that have the same criteria. Yes, you can. It happens always. Okay, because almost the stocks that I'm talking about, people, they don't know about them. You say, how? All the market people, they don't. Yes, they don't know them. How do they know about them? They have low volume. There are thousands of stocks that have low volume. How can you find it? So you should have criteria to use it in your stock screener, or you have a way to search for this kind of stocks. These stocks are not easy to find because in the market we have thousands of stocks the same as this. If you go to $1 stock, how many you find? You find thousands of companies that are $1. But which one will go up? Which one you make money? Okay. So this is the secret of any strategy. It means if it works, it should have a good setup and a good plan for any stock. Okay. So thank you very much for watching. If you have any question as usual about these penny stocks or small issues, equities, just ask me questions. Thumb it up or subscribe if you don't, or ask me a private message, and thank you very much.